this morning.
Good morning or good afternoon, actually. I think I'm probably the only one from Perth on here today. Welcome to today's webinar, which is the Queensland Investor Market Trends and Insights. And I have two lovely people joining us today. We've got Debbie Watkins from Area Specialist and Talisha from Island Sands Asset Management. Welcome, girls.
Hi, guys.
Thank you so much for having us, Sash.
Sandy was going to join us as well, but Sandy is on some annual leave and no doubt well-deserved, so we'll leave her alone for today. So I did this session for the Melbourne investor market last week. Today we're going to do Queensland, and then we've got sort of Perth coming up in January. And the reason why I like to do these with you ladies is because what you hear in the media is like absolutely different than what we find on the ground. And I think it's really important that we find out what's happening on the ground, just because the media is very generalized. So that's the purpose of these, making sure that everyone who is either an investor in Queensland or wants to be an investor in Queensland has access to that absolute on the ground support. Now, today's webinar, if anyone does have any questions, you can just pop them into the Q&A and I can ask Debbie and Talisha as well. So that's the purpose. And I want to start off by asking you, Debbie, have you seen a big influx of investors at some stage over the couple of years, and now in comparison to now, has it died off? Is it still there? And maybe just sort of share your location as well for me.
Okay, so I'm from the Redlands area. So we're about 45 minutes out of Brisbane on the coast. Definitely have seen a difference. I think we had where we are, not the dynamics have changed, but the prices have changed. So therefore it's actually not as viable for as many investors looking to buy in this area, because the yield's not as much for them. We do, in saying that, have something that's not really around anywhere else, or we haven't seen it, and that is within our council we have something called a dual lock situation, and that's where as long as you have an 800 property with a 20-metre frontage and you have a house at the front and are able to put another house at the back, this is a new zoning within the Redlands, and we're seeing a lot more of it because it's giving an 8 or 9% yield back. That we're seeing a lot of, but not with where the investors are concerned. We've actually seen them drop off, especially with the rate rises and things.
Yeah. So are you, when you talk about that dual situation, in WA we call them granny flats. Is that something similar?
No, because these are actually real. They're like 4 2 and 2s. They're 4 bedroom, like they're full houses. So we do have granny flat situations here, but it's not as economical, and we don't get back that yield that you need. So it's quite unique to this area, actually. I haven't heard of it much before. And when people talk about dual lock situations, they always think, oh, that's dual occupancy, 1 house, 2, but that's not at all what it is. And there's even builders, when you're talking to them, they go, you can't do that. I'm like, yeah, you can. We have it a lot. So a lot of our investors are becoming those dual OC owners where they've got 2 incomes from the one site.
Yeah, so it's sort of like repurposing their existing property to add value. Yeah, I like it.
That's right. Yeah.
And what about you, Talisha? Just go and let everyone know your area that you're in and how you've seen the market change, maybe as of a couple of years ago to now.
Yeah, absolutely. So I am based in Gladstone in central Queensland, and we have seen a huge amount of growth in the last 2 years, definitely. Like coming off the back of our downturn as well, our yield that we have in Gladstone at the moment is spicy. Like the investors are loving that yield that's coming through. Our housing prices are still really good value for money versus like what you can get for rent here as well. Like it's even still cheap here to rent as opposed to buy. So a lot of people are still renting here. They'll move here for a couple of years for work. They might be in a management position, and it's still cheaper for them to rent than it is for them to buy a house for a couple of years and then sell it. So we're seeing a lot of investors buying into the market because our rental yield is obviously so strong at the moment. Dual ocs as such aren't a big thing here. I don't actually know how they'd go with the Gladstone Council. So that's actually, I should call the council and have a chat with them about it. I haven't seen many properties come across my desk that would have the dual oc situation. Most of them are just looking at buying the stock standard 4-bedroom, 2-bathroom, double lockup, low set brick, probably around 12 to 13 years old. They're not very old. And they're still buying them from around between 500,000 to 550,000, and now we're achieving between 570 to 600 a week in rent. So that rental yield is still really good. I did have a chat with one of our valuers in town recently as well, and we are most definitely still in a rising market. They don't see the light at the end of the tunnel yet for our Gladstone market, which is really good because we need the growth.
And so you said you can still purchase for around 550,000 and maybe get that 570 a week for the property. Do you know what the stats are from your applications, like from an affordability point of view? Where's that sitting?
Or applicants that are applying for that 570 a week can well and truly afford it. So we've got the industry. So for you, Ash, we are very similar to Karratha. Industrial. I was actually born in Karratha, FYI. But very, very similar to Karratha setup. So anyone that's like all applications that are coming across our desk, no real issues with affordability. It's more so the lower end stock that's probably around that $400 a week mark. That's where I'm seeing a lot of tenants not being able to afford that $400 a week if they're on a lower income. Yeah, but most of the time, the applications that are coming across my desk can well and truly afford that 570, 600 a week.
So maybe
rent.
like a 15 to 20% affordability, would you
Yeah.
say? Yeah.
Yeah, I think in IRE they're sitting at like 25% affordability.
Yeah, so I would say
yeah.
that there's that bit of growth there for that to go up. And what about
Definitely.
you, Debbie? Like, what's sort of like if someone was to buy an investment, what would be a good price and what would be like a return that they would expect?
So that's where the difference is. So we've gone up now. You're looking around that 750, 800 mark minimum.
Wow.
And that's what, yeah. So, and that's for a much older house. So, you know, they're even starting to creep up way into the up into the mills for like a townhouse and things like that. So, you know, once upon a time where the townhouse market was very big here, it would have been, you know, around that 650 to 700 to buy one. They're creeping up there to that 9 to a mil, and they're only getting back that 700, 720 a week type of thing. So yeah, that's where I think the dual ops are coming in, where they're getting that dual income that's being really honed in on at the moment. Yeah, in Queensland itself, you're probably like going further up the Sunshine Coast to Burpengary, you're getting a better yield. So and then out to west to Ipswich probably. We don't like, I know about Gladstone because my brother's up there as well, but so I know how, like, he owns a house and he'll come down here and he'll go, what? That for that? It's like, it's very, very different. So the housing market's gone up, and unfortunately the rentals, like, you go online and you see, you know, people are living in the streets and they can't get rentals and all this sort of thing. It just does not happen. Like, if we get a rental for around that 650 a week, yeah, it's gone pretty quick. But, you know, when I say quick, it's still 2 weeks. It's not snapped up like that. So,
and
yeah.
what's the affordability? What are you seeing on your applications? Are people that are applying, are they spending 20%, 30%, 50% of their income on rent? Like, what does that look like?
The affordability is not a problem at all.
Yeah.
A lot of them even are coming from the city and have the city jobs, because we're on the train line. They have the city jobs that are paying the money, so there's not a big deal for that. I think probably in saying that, it's around about probably 40% of their wage.
Yeah.
So it's like, yeah. Yeah.
It's so interesting. I think, like, as someone who doesn't live in Queensland, when we see, general media, it's Queensland, WA, New South Wales, and it's like, oh my gosh, it's so great to hear you two have such a different perspective on your area, which really just showcase you can't just say, oh yeah, I'm buying Queensland, or yeah, the market's good in Queensland, because it's different. It's so much. So it's really good to get these insights. I find the same thing with affordability, because I think that we hear a lot about how, cost of living, and 100% cost of living has gone up. If I have to go buy a block of chocolate for $7.50, I'm waiting for it to go on special. So it's definitely gone up. But the affordability, I'm seeing the same thing. So like with us, we find that on average, around 17 to 20% is where the affordability is sitting, which I think is really good. So if that's what you're spending on your rent, you should be okay, like, give or take, but you should be okay. Where I think the media makes out that, people are spending 50%, 70% of their income on rent, when I'm actually just not seeing that. Maybe a small portion are, but it's not common. So good to hear that's the case as well. And really good for people to understand their different investment plan, because while, yes, you're saying, Debbie, that, your prices are a bit higher, but the rent's a bit lower, but it actually sounds like there's opportunity with that situation, which is still very good and might suit someone really, really well, as opposed to Talicia's market, where, there's still growth capacity, good affordable prices. So really good, but different markets. Next question for you, ladies. Queensland legislation and the changes that you've seen, and most particularly, I want to point out the rent capping yearly based on the property, not the tenancy. Do you think that's been a factor with investors? Like, have you seen local investors say, stuff you, I'm getting out of the market? Has that scared people? Is it not a big drama? Is it fair? I'll start with you, Talicia. How's that affected things?
I've seen so many different, my headphones are, there we go. Now I can hear myself. I have seen like so many different which ways, like in our market, particularly at the moment, because our market has risen so much, and a lot of my landlords have ridden out the downturn. So now we're obviously on a rising market, and they can sell for what they probably bought for 12 or 13 years ago. So I have a lot of investors actually exiting because of that reason, and not so much because of the tenancy laws. Some of them have kind of gone, stuff it, I'll just increase the rent. And I'm like, you do you. This is my recommendation. If you want to take it higher than that, it's up to you. And you could potentially lose a really good tenant over this. But the rent increases, really, you only have one chop at this. To increase the rent from an investor's perspective now. If your tenant breaks lease halfway through the year as well, you're now stuck with that rent for the next 6 months, maybe 12 months if you sign a 12-month lease. It's just so many factors to take into consideration when we're renewing leases, when we're signing new tenants on, it's just a lot more background work, I guess, that Sandy and I have shielded our owners from. That we've educated them, they know about it, but they just know that we're working diligently in the back end to protect them and give them the best opportunity to have an investment property, I guess, in Gladstone. So Sandy and I have worked really hard, I guess, in the background to line things up. But yeah, break leases, I guess, is probably what's driving me mental. I've got a lot at the moment. And it's just people leaving town, people moving to town. Oh, sorry, not moving to town, but people leaving town, people buying houses. And yeah, but I haven't got a lot of owners exiting because of the laws. It's mostly because they're finally about to break even from our downturn, and now they're like, right, we need to go now. We've done a really solid 13 years. It's taken us a long time to get here. So yeah, that's why my investors are exiting the market.
And well done for you as well, like not maybe stressing them out about it, not necessarily making a big drama about it, just working alongside those new laws. So that's great. And also we're finding break leases shocking at the moment as well. It just must be a general thing because they're very, very big at the moment.
Yeah, and because now we have new break lease laws. So if your lease was signed after September 30, you are now, we've got like, there's a calculator on the RTA website. So like tenants can just jump on and like calculate their own break lease costs. I actually enjoy that because now it's like, there's no hidden costs with us. It's like all transparent on the RTA. It's like the RTA said so, like that's how it is. So I'm okay with that. But it's just now navigating the fact that I'm running 2 lease agreements. So some of my tenants signed prior to September 30, and then the rest of them have now signed obviously after September 30. So it's just working out like when they're breaking lease, are they on a new general tenancy agreement or are they on an old one? So it's just,
coordinating that. And over to you, Debbie, same question. Did you find that the change of legislations deterred people maybe from keeping their property or buying in? Any changes in your market?
We didn't really have that many people deterred or wanting to leave for that reason. Legislation hit us really hard when they brought in that 12-month policy where it went to property, not the lease. And because we have a sales side as well, and we're heavily involved in that, that really caused some problems because in Queensland, they actually didn't tell us about that until it like really happened. Did they, Talish? It was like, bang, it's happened. So we did have a few people that, for instance, they would buy a property and it would be rented or leased back to the person they bought it off of for a smaller amount of rent because doing them a favour, look, we've bought it for a great price, but we'll lease it back to you for $500 a week and for 4 weeks. Then when the 4 weeks was over, then all of a sudden it was like we couldn't put it up. And we had quite a few people that had bought going, but you said we could. And it's like, I know we said we could, but now the law's changed. And now for the next 12 months where you thought you were going to get $750 a week, you can only get that $500. And we actually did have 2 people leave going, no, you should have known this, rah, rah, rah. And then it was funny because we actually got from the bond authority, we got these letters saying, when was the last lease renewal? And like they knew that they're all over it. They knew that they weren't going to get away with it. And actually they got big fines for it. So they thought, we even had one guy say to us, but it's only going to be a fine of like $11,000 or something. And we're going to lose this much. So can't we just do it? And we're like, well, no, it's the law. We actually can't do that. But anyway, they ended up getting the fine. They paid the fine and off they went. So that was a really hard one. And now there is a lot more work with the leases. You've got to put in the old dates and when it was up for renewal and all the rest of it. But the bond authority is really all over it and you just can't get away with it. There's, like you said, there's also now that new legislation about they can calculate everything, but we're not seeing as many break leases at the moment as what you guys are. So yeah, we're pretty lucky on that. Yeah. And I think it's really, really important to be, like you said, you've got to be talking to your landlord and just saying, look, there's no use in putting that up because it's already at its highest. And if you've got to pay another lease fee and then you're going to sit with it empty too, is it really worth it? If you've got a great tenant, hold on to them. So yeah, but legislation, get yourself a really good property manager because there's a lot of new legislation in Queensland, like huge.
And I have heard stories about how they just bring it in like that and surprise.
Yeah.
I literally had Stacey Holt training the day before. It happened on the 6th of June. So it was very, very quick. I had Stacey Holt training on the 5th of June. And then it literally got brought in the next day. We were all just sitting there and I just saw it come on my screen, like our REIQ chapter committee. It was just going nuts. I was like, oh my gosh, it's happening.
Wow.
Like, please give us some warning, even a couple of weeks would have been good, but just do that. you know, and you've got people going, you should know all about this. Well, normally we would, but
we knew what, and the issue is too, Debbie, is that they didn't tell us the laws that were actually coming in. They just gave us an overview of what would be coming in, and we were like, okay, cool, no worries, we can work with that. And then they did like a 360 on some of the laws, and some of the laws didn't get brought in. They're getting brought in next year, and it's just like, what is going on? It was just like the whole week was just like trying to navigate everything. And then tenants that had signed leases like a couple of weeks ago that had a rent increase, then we had to retract the rent increase. Yep. My own property was up for rent. It was a break lease. I increased the rent. I wasn't allowed to, also not a break lease. I did a mutual termination. I couldn't increase the rent. So like even my own house was affected in all of that as well. And I was like, what properties are affected? And I was like, oh, that's mine. So it was just, it was so much work. And we had to redo lease agreements. We had to do rent adjustments. It was a mess. It was an absolute mess.
Yeah.
I think I'm okay now, but
I think we're on top of it now too, thank God. But it was just, the rent backs and lease adjust. It was just mental.
Yeah. That's why you use a property manager and don't privately manage, I guess. Definitely not in Queensland anyway. So 2 last questions for you, ladies. The first one, like we see a lot of, or I see a lot of mistakes that sometimes investors can make when buying a property. For example, there was one, or the main one that I'm seeing is where sales agents are making buyers feel a little bit rushed. They're selling a property as is, and then they're buying it, and then the property is exactly as is and is causing a few issues. What sort of, have you seen an investor make a bit of a mistake? Like, what are you seeing as a common problem that maybe they could learn from each of you to not fall into the trap that maybe your other clients have? The one that I'm referring to in my mind was a client that purchased a property. The photos were about 5 years old, and they were from a pre-trashed property. He bought the property as is. I went through just before settlement, and it was not like the photos. And that was something now that we've sort of learned to maybe ask the question about how old are the photos and things like that. So that's sort of like, I guess, one of my example stories. Talisha, have you had any of your clients sort of have a bit of a horror story, investors with buying a property, maybe a little bit,
Yeah, I actually just had one just recently. And they purchased it with a buyer's agent, and we didn't do any of the legwork. It was with another agency. She called, asked if we could take over. And Sandy and I were like, sure, no worries. So we had a look at it and we thought, yep, cool, no worries. Like, we can work with this. I rocked up to the property and it was nothing like the photos. It's just like add-on after add-on after add-on has been added on to this poor old house. And it was just a bitzer. I've never seen anything like it in my entire life before. And I walked up the stairs. It was vacant. I walked up the stairs. It was only a couple of months ago. And a camera was just like looking me dead in the eye. And I was just like, this property's been vacant for like 6 weeks. Why is there still a camera here? And yeah, so I think just making sure that whoever is doing, like the property manager that you pick when you are doing like your due diligence, makes everything right. So even if you are working with a buyer's agent, like ask who their property manager is in that area that they're working with, because whoever did the due diligence on this poor lady's house, yeah, I got no words. It was an absolute disaster. I've never seen anything like it before in my entire life. And it was just, they'd enclosed a balcony, they'd added stairs, they'd taken stairs away. None of the keys worked for the house, and cameras everywhere. It was just, and that was just it for me. Like I just knew then and there that whoever I talk to, like that's buying a property, if they go, oh, I've got a buyer's agent, but I'm doing my own due diligence, I'm like, good on you. Like you need to do that, because the buyer's agent, even though that like they might be a really good buyer's agent, they might just have a property manager that's not working in their best interest and is just doing it because it's in management in their eyes.
Yeah.
Not an investment. Yeah,
I've got a few that are with a buyer's agent, but then behind the scene they would still come along and say, hey, the buyer's agent's put this property and this property to me. What are your thoughts?
What do you think?
So, yeah, you know, you can do that as well. So yeah, definitely a good reminder for everyone. What about Debbie? Have you had any investors have bad experiences?
Yeah, especially even lately, because of the different price hike and everything else, we're finding that you might be a sales agent and then they'll just go to their property manager and they'll say, can we have a an appraisal on this property? The property manager hasn't gone out there. They haven't seen it. They've just looked at the photos online and gone, oh, yeah, this will be worth this. Problem is they're not correct. They're outlier. And these are lifelong decisions. You know, you might be saying, oh, we're going to pay $800 for this property, and they say we're going to get $850, but you're only going to get $750, which is a big difference in the back end. So we have a lot of interstate investors, and this is where I think property profiling comes in. I think that it's really, really important, first of all, to always ask, even though the buyer's agent or the sales agent may have that appraisal, and that's great, I think that you should always have a property manager in your back corner and say, listen, I am going to this property. I have been given this amount. What do you think? And I think it's always good to just get another opinion that's not to do with the sale, that's not to do with that company. And yeah, they're probably the ones that are going to be more honest with you. I think that we're pretty lucky where we do, with the ones that we've got, we do go out to the property a lot, or we'll go on a Saturday and have a look for them if they're interstate. If they're not, we'll say, hey, when they get in touch with us, it's usually before they go to unconditional, thank God. So we can go, well, if you're going unconditional on, say Monday, would you like us to come out with you and see if we can get through on the Friday to see if there are any other factors that you might want to think about? So that's really helping us. But I think you should always get third party's opinion. I just think it's really important.
Yeah, that's a universal problem all around Australia with those rent estimates that sales agents are putting on the ads, and the ones that sales agents are sharing, because I mean, some of them might, potentially have a really good department that they are, property management department where they're getting that price from, and that would be fine if they are, but quite often they can be inflated so that they the sales shows a strong yield. Yeah, so definitely got to watch that. And just like us as property manager, maybe not you, Debbie, because I know you probably do sales as well, but just like I wouldn't feel comfortable appraising a property for sale if someone asked me as a sales agent, don't go estimating the rental because you're not
sticking your lane.
Lane, correct.
Yeah, I agree.
Now,
I always just say, I'm not the person to be asking. I have, I could guess, but I'm not the person to be asking.
Yeah, absolutely. Last question for you guys. For me in Perth, my ideal investment is like a 3-bedroom, 1-bathroom, 1980s, good condition, but somewhat original house with opportunity. So that would be like my ideal investment property. What does an ideal investment property look like for you, Talisha, in your area? If someone said to you, I want to buy an investment, what do you think would be the best type?
3 to 4 bedrooms, 2 bathrooms, double lockup. 100%. They rent like hotcakes.
And what budget?
Oh, that you could get a 3x2x2 for like 480,000 even now, which I still think is amazing. My own investments are 3x2x2, and it's never empty if it goes, and it's in a great location, low set, flat, brick. Like you can't go wrong with them. The 3, 4, 2x2s.
Excellent. And what about you, Debbie? What would a perfect investment look like in your area?
4, 2 and 2 with side access.
Yeah.
So where we are is on the water. People are always with their jet skis or their boats, or I would always say if you have room for side access, it's just and of course your things like aircon. Everybody wants aircon. And just the simple things like your dishwasher and your security screens. Even now people are more, so there's lots of little things that a work from home area. But I'd say a 4, 2 and 2 definitely every day of the week. Low set's preferred over high set. And apart from those little things that would make it fantastic, I'd say if you can get something with a bit of side access, that's a bonus.
And what budget do I need to get that?
To buy?
Yeah.
Yep. They need to buy, it's probably around that 800.
Yep. Okay.
Yeah.
Amazing. Wonderful.
Yeah.
They have been excellent on the ground insights for us. So I really do appreciate you guys sharing that. And yeah, just such a great example of the different areas, even just in Queensland. And also the other reason that these sessions are very good is because we all have investors that own multiple properties in all different locations. So I've got clients that maybe live in Sydney, own in Queensland, own in WA, and it's really hard for those clients to navigate those different legislations and to understand, you know, how they work. So really important for that education piece as well, just so clients don't assume that the way you do things in Queensland, for example, is the same as we do it in WA. So really staying up to date with that is definitely a focus point for me. So if you are looking at buying or investing in Queensland, Debbie and Talisha are both highly recommended property managers and have great agencies. So do reach out to them. If they are not in an area that you are wanting to buy in, reach out anyway, because there's a good chance they'll know someone that they could recommend in a different area if they can't help as well, or you can just reach out to me. But thank you guys. Have a wonderful Christmas.
Thank you for having us.
We'll do another session next year, see how everything's changed. And yeah, if anyone needs anything more, please reach out.
Thanks, guys.
Thanks so much,
guys.
Ash.
Merry Christmas.
See ya.
Bye.